The Castlebridge Capital Market Observations Call for the week of February the 23rd, 2023. I'm your host, Eric Jefferson. I hope everyone enjoyed a long weekend, kicking off a short week of trading here. I actually saw a great deal of volatility on Tuesday. That was following a spike in interest rates that weighed very heavily on both stocks and bonds. Granted, early trading on Wednesday here have started to see a modest recovery. But with all the volatility, wanted to take a step back and just offer some context. Again, if we go back last year, the Federal Reserve, led by Chairman Jerome Powell, embarked on a historic campaign raising interest rates. That was in response to a historic rise in inflation. Towards the end of last year, we started to see those those actions take effect. Inflation began to top and head modestly lower. And as a result, there was an expectation then with disinflation in progress, the Federal Reserve would be able to pause additional rate hikes and then likely pivot later this year or cut interest rates, again, in response to getting inflation under control. The question for markets going back to January of this year was whether or not the economy could hang in there and withstand the historic rise in rates that we had endured in 2022. As a refresher, higher interest rates, a tool used by the Federal Reserve to combat inflation, but at the expense or ultimately a result of slowing the economy. Now, as we look back on the economic data, beginning in January, came in much, much better than expected. We have estimates for GDP, or gross domestic product. That is the measure of the overall size of our economy. Came in much better than expected. Got some very encouraging data that consumers, measured by retail sales, we're going out, we're spending money well above expectations. That's especially important as consumers represent about 70% of our economy. And then on the labor front, continue to see a decrease in the unemployment rate. Now at 3.4%. You have to go all the way back to 1968, the last time we were at those current levels. And so once the market received some encouraging data that the economy wasn't headed, for a Great Depression, markets were off to the races. At one point, we saw the S&P 500 up almost 9%. Interestingly enough, that was led by a lot of the lower quality or lesser fundamentally sound companies. Now, before the celebration got out of hand, unfortunately, we received a few inflation reports that suggested some of the optimism around falling inflation was maybe a bit overdone. Specifically, we saw a lot of indications that some of the larger and the stickier components of inflation may actually not be decreasing at the rate or nearly as quickly as the market was hoping for, suggesting that the path to getting inflation back under control may be much longer and potentially much harder than expected. So we think about the narrative, that was almost a 180 at the beginning of this year. Initially confident that inflation's under control, we were worried about the economy. Now, fast forward, fairly confident with the economy, worried that inflation not going to be tamed anytime soon, and thus may require some additional pain via the form of higher interest rates. I think one certainly has to appreciate the irony here. We're good news on the economic front. Again, the one question market participants had going into this year actually turns out to be a negative when we think about the resulting implications that higher rates may ultimately have. Good news is if you've been fairly conservatively positioned going into this year, both with respect to stocks and bonds, you've been immune to a lot of this volatility. And at this point, we take a step back. Does appear that markets are fairly reasonably priced. That being said, though, certainly a change in economic data one way or the other could very well result in a swift and a very meaningful response to risk prices, either up or down. Again, that will ultimately be a function of where we go from here. That's all for this week. As always, happy to discuss anything in more detail. If you don't connect, have a great rest of the week. Take care.